Do you think that it behooves one to avoid the broader semiconductor basket or ETF and stay with a few specific names, or can I just buy SMH and let it ride?
Yeah, I think buying SMH and letting it ride was a 23-24 story. 25 is going to be a different type of year. It's going to be much more specific. And there's where you really want to go with the leadership positions, where valuations make sense. And you got to expect that they're going to trade on their earnings growth, not those other influences. So TSM is a core holding there. Nvidia with the new Blackwell chip. That chip is 30 times faster than the first generation of their AI technology. So there's going to be appetite for that as well. So those are two core positions. I think when you start to look at the rest of the semi business, you see a lot of companies that kind of lost the arms race to Nvidia or TSM as a fabricator.
It's easy to understand why Nvidia is one of the most popular stocks to follow these days. Its dominance in the market for artificial intelligence (AI) accelerators accelerated its revenue growth and positioned it as the second largest semiconductor firm by market capitalization, after Apple. Regretfully, the success of Nvidia has made it more challenging for investors to decide whether to purchase shares at this time. Is it a no-brainer purchase due to its technological leadership and ongoing development, or is it currently too costly to touch due to its valuation? The majority of tech investors are aware that the company's AI acceleration and revenue improvements were mostly responsible for the stock price increase. In just 3 years, the data center division that creates AI chips moved from being the company's second largest source of income to generating 88% of its total revenue. Given the current status of the expanding AI chip market, this is serendipitous. Through 2030, Grandview Research projects a compound annual growth rate of 29%. Nvidia is also in the best position to service this industry given the anticipated increase in accelerator shortages. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
On the heels of this jump in TSM, you do have an up move in Nvidia, building on some strength that it had yesterday as well, as the stock works its way back through the 130s and perhaps on to 140 or even 150. If you're bullish in this name, we don't hear from Nvidia in terms of its earnings released till late February, but say you wanted to set something up, you got this update from TSM, you got this, kind of resurgent of bullish activity yesterday in the overall market, and say you see a run towards 150 or beyond in Nvidia in the next month as we go into and lead into its own quarterly earnings. I have a strategy that would benefit from a move towards 150 by the February monthly cycle, which is February 21st. And so with this particular trade, what we're looking at is the call calendar spread. Now, most importantly, this is very customizable. I laid out the thesis for the 150 strike being the target, but if you have a different target in mind or different time frame in mind, this could be adjusted. So when you're looking at this one in particular, this example trade, selling the end of the month, January 31st 150 call, and then buying the February 21st monthly 150 call, basically using that shorter dated option to reduce the overall cost of that longer dated option. That's the calendar spread in a nutshell. $1.75 debit means you have $175 in risk on this trade. But what you'll notice by that risk profile is it's really about precision. This is a strategy that does best if the stock does move towards that strike and get there pretty close to the expiration of that short option. However, you do have risk in both directions. This could overshoot to the upside, and it could, of course, not perform as well as you thought in this case, and actually underperform to the downside too.
Accelerators and the CUDA software platform, which solidify its supremacy in AI chips, are only the beginning of the innovation. At CES, Nvidia just revealed some of the many new items it has been working on. Among these are a graphics card based on the Blackwell architecture and other AI-powered innovations intended to enable self-driving cars and humanoid robots. This breakthrough raises the possibility that Nvidia may become even more crucial to the IT sector in the near future, even though only time will tell how well these goods do in the marketplace. In order to do this, Nvidia's revenue increased by 94% to $35 billion in the third quarter of fiscal 2024, which concluded on October 27, 2024. In the midst of that upswing, its net income in fiscal Q3 increased by 109% to $19 billion. Experienced investors are aware that the triple-digit revenue rises of previous quarters are unsustainable, so they should be ecstatic to see such growth. Regretfully, firms that slow sales growth are often punished by investors, and if you look behind the surface, the company's price may make it vulnerable. Even if many slower-growing tech stocks have a greater profit multiple, its price-to-earnings ratio of 53 appears to be higher than the average for the S&P 500. Although the price-to-sales (P/S) ratio of 30 more clearly shows how costly the company has grown, investors who wish to profit from Nvidia's explosive growth might not be put off. However, its valuation enters nosebleed territory with a price-to-book value ratio of 51. AMD, in contrast, is trading at little more than 3 times book value. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
I got Jenny here with me for some more thoughts on what's working today. It's not a rally without the quantum stocks.
Of course it isn't.
Jenny, so what, AI and quantum going to get along a little bit better than maybe Jensen Huang suggested in his last commentary?
Well, so now we have heard from a lot of these CEOs, like the D-Wave CEO, who's like, that was completely false. Mind you, though, quantum computing is so complex that all things can still exist. You can still see various degrees of quantum computing already happening in today's world, while also Jensen Huang could also be correct about his projections. I think that still remains very much clear. But after seeing some of these names pummel like 50, 60% in just a span of a few days, now attempting to rocket higher, and despite, again, several CEOs, it wasn't even just NVIDIA's CEO with this commentary. Microsoft wrote on its blog that 2025 was the year to become quantum ready, which also then was coupled with several analysts' upgrades to the sector, and quantum computing stocks really off to the races. Additionally, we got some news that NVIDIA announced plans to host its first Quantum Day at the GPU Technology Conference 2025, sparking further enthusiasm. That does not occur until March 20th, so that we have some time there. But I do think that is expected, at least per some reports, to convene industry leaders and experts to really discuss the state of quantum computing and its trajectory and the various applications and breakthroughs that it already does have in existence. And when I was first talking about this last week, everyone responded like, okay, Willow, like Alphabet's chip, for example, it's already happening as far as quantum computing, and that is correct. It's just, I think, again, both narratives can exist, and you can still be so preliminary in this space. I think it's the pace of growth we've seen in quantum computing over the last several years that really sparks so much interest.
Yeah, it's very true. It's speculative, it's early, but it certainly has a lot of promise and very exciting.
So volatility. So if you're into that for trading.
Yeah, which is, I think, what people really like about them mostly, to be honest. That they've had such wild swings. Rigetti being, I think, one of the most fun ones. LAES is also a pretty fun one. Seals Q. All right, so they're all up double digits after getting slammed. So the market's finding a lot of stuff to love today. Thanks, Jenny. All right. Nvidia doing a quantum day. Can't hurt either. Nvidia, it seems like anything it touches generally goes bullish, so quantum with some life plugged into it again.
Furthermore, because of its success, Nvidia is more vulnerable to the cyclicality that has always characterized the semiconductor sector. In fact, the stock prices might hold, and it's probable that Nvidia's stock won't see a big decline very soon. However, its circumstances indicate a significant weakness. The cost of new AI accelerators exceeds $30,000. Prices will probably follow a decline in demand, though, which might slow or even stop the company's revenue growth. Over the past 7 years, Nvidia's stock has also seen 2 pullbacks of more than 50%. Another major slump could result from such a reversal. Fortunately, cycles eventually move upward as well, so Nvidia's stock ought to eventually bounce back from any decline brought on by its new technology. However, given the inevitable occurrence of a down cycle, investors would want to reconsider making large purchases at this time. Investors should consider Nvidia a hold in the current market. Given the cyclicality of the chip industry and its valuation criteria, investors are probably overpaying for Nvidia at its present price. The corporation does, however, profit from its obvious supremacy in the AI chip market, which is not expected to alter very soon. Furthermore, its ongoing innovation is probably going to solidify that supremacy and promote longer-term growth. Therefore, sticking with Nvidia is likely the best course of action for its stockholders when weighing its advantages against its disadvantages. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.